So the standard cost of direct materials, labor, and overhead for one bat by this ProBat company. And so they're saying here is this is what you'd kind of see in your computer, right? You'd get it in a system like SAP or Oracle or QuickBooks. You would input your information. Someone would determine, a managerial accountant would determine that the standard quantity used for our bat is 1 kilogram of wood, and it's about $25 per kilogram. And so the total standard cost is $25. And then we can determine if we use too much wood or we spent too much on the wood. Labor takes 2 hours, and it costs $20 per hour. And the overhead is 2 labor hours. And when we talked about activity-based costing, that's where this comes from. We define where we'd want our overhead to be pegged against. It could be pegged against labor hours, could be pegged against or benchmarked against, units of production. It could be anything. We can decide anything. We talked about that in our activity-based costing lecture. And so ultimately we define our final standard cost here, and we'd be able to determine if it's favorable or unfavorable after we compare it to what we actually produced. So let's talk about computing the total cost of variance. So if total actual cost is greater than standard cost, it's unfavorable. If actual cost is less than standard cost, it's favorable. That's just common sense, right? If we spent more than we thought it would cost us, that's all we're saying. This is our standard cost is also estimated cost. So I'd circle this. Actual cost greater than standard cost is unfavorable. I'd note that. Actual cost less than standard cost is favorable. Common sense. If we spent less than what we expected to spend, then that's good, right? I'd like to spend less on groceries than I thought I would. I'd like to spend less on anything. This is called cost variance. These unfavorable and favorable variances when we're comparing the total cost. So if we're looking at this bat, it'd be if we spent $80 on the bat, that would be favorable. If we spent $90, it would be unfavorable. So memorize this component. If it doesn't make common sense to you, memorize it. And so what do we do? This is just the process of how we would analyze these variances. And so first, the reports are prepared. This is just the process of after we figure out there's a variance. So let's say we found out that the bat actually cost $100. That doesn't tell us much. We would need to figure out, was that driven by the direct materials, the direct labor, or the overhead? So how do we approach that? We prepare our reports. We would see, okay, we would find out that it is costing $15 or more and try to find out, is it driven through the direct materials? Is it driven through the overhead? Is it driven through the labor? We do that through analyzing the variances from the reports we're given. And then we just go talk to the teams, right? I would go to the direct labor department and say, hey, you spent $15 more on your labor. Maybe there's overtime. If it was overtime, why don't we hire more employees, or why isn't managed it better? So we'd ask questions, get answers, to figure out what the issue is, and then we'd solve for the issue of, okay, let's hire another employee, or maybe we need a new manager to make sure we're not paying overtime. Or maybe our budget's wrong, right? We go through and solve for this issue. That's the strategic action if needed. And so cost variance computation, memorize this formula. The actual cost is the actual quantity times the actual price. The standard cost is the standard quantity times the standard price. Memorize that. It makes sense, right? How much we spent is how much we purchased times the price of what we purchased, and how much we thought we should spend is what we estimated we should spend, the standard cost, minus the standard purchase price, what we estimated we thought would cost per product, or how much we thought we'd build times how much the cost per unit of being built. Standard, that word throws people off, right? Actual cost, I think, is pretty self-explanatory. But standard cost just means estimated cost. So what we really thought it'd be. It's just a type of estimated cost. So memorize these terms. Actual quantity is what we thought we were going to use. Standard quantity is the estimate or estimated quantity, what we thought we should use. This is what we actually used. This is what we thought we should have used. This is what we actually paid per unit. This is what we thought we should have paid per unit. That's it. I know it seems like a lot, but common sense. What we think we should pay versus what we should actually pay. And we need to know this because you're going to break out this. You need to play with this formula to be able to figure out if the quantity is throwing stuff off, the time quantity, the paint, or is it the price? The quantity could be time, it could be units, it could be what we're creating, price. It's how much we could be paying for those units.